everybody, I'm Rifila Palakhawa, but a lot of people know me as the Iron Lady, and I'll be your host for today's interview. I'm here with a beautiful lady called Millycent Mashele, the founder of the Legacy Center. One of the services that they offer is accounting. So today we are here to understand what is accounting, what do businesses account for, and so on. Millycent, so tell us, when we are talking about accounting in business, what are we talking about?
Thank you so much, Rifile. So accounting for business is one of the pillars that is very important in strategy, because definitely as a business, you need to account for all that you're doing. So in this case, accounting really means accounting business transactions. On a day-to-day, a business does transaction with its stakeholders. For example, with its customers, it will do sales, and then there will be revenue that comes in or income that comes in. For example, it will have a relationship with employees. How do we account for transactions that it has with employees? So everything that happens within the business, it has to be accounted for in terms of its monetary value and how it then has to be reported in terms of accounting. So I would say that accounting is really just taking business transactions that happens within the business day by day and be accounted for depending on what is happening within the business.
All right. So I'm a new business owner. I have a turnover of so much. Now I need to bring my books to you. Which documents do I bring to you?
So before maybe we get to that, I would want you to understand the types of accounting that are there within the business. So before I would want to see the documents, I would want to understand what are we accounting for.
All right.
So in that sense, accounting has two purposes that I really say I highlight is either management accounting or financial accounting. I'll tell you the difference there. So management accounting is a tool that is used for internal purposes for the internal stakeholders, especially your directors and the investors within the business. So within that sense, you choose what tool, what accounting do you want to see. For example, in terms of revenue, which is mostly the transaction that you have with your customers, you would account for the revenue in terms of your pricing, in terms of your quantity, in terms of the costing, what you use to cost that product. So then you need to, as the business or within the management accounting, which is an internal user, you have to decide how are we going to account for our transaction internally.
Okay.
So then if you want to, you come as a business owner to us and you say, please help me account for my management accounting activities. We will then request your pricing model. We will then request your costing of your products. We will then request how do you then make assumptions about the future. So it will then be specific to management accounting.
All right.
And then with the financial accounting, on the other hand, it really deals a lot with the external users.
Okay.
So the external users of business, it would be people like investors who are outside the business. It will be people like the bankers. It will even be people like someone who's a prospective customers to the business. They want to see how the business is functioning for them to do business with you. So there is a specific way of how we account because it's financial reporting that is aimed at a person outside. They must make a decision from the point of view from outside to inside. So then that is based on international financial reporting framework. It has to be reported a certain way that is aligned across the board within the country. So you can't have different ways of accounting. So that's where you will have to account your financial statements.
Okay.
You prepare your financial statement. Financial statements has to be prepared in accordance with those frameworks, and they have to be prepared by accountants because then they have went to school to know how to prepare in terms of the financial reporting framework. So that's where we will then say, because now you want to do financial statement, bring for us your transactions, your sales, your invoices, so that we can have a view of the transactions that is happening within the business.
Right.
Your bank statements and all that. So those are the documents that we would want to see. Yeah.
All right. So you collect all the financial statements from the other businesses. What is the one thing, or maybe you can mention a few, that businesses, the mistakes that they do when you look and analyze their financial statement, that they should correct?
Really looking at the financial statements as a user, let's say I'm looking at the financial statement of a business, I really have to get a feel of how they're performing as a business. Looking at their financial income statement, I would have to see how is their performance. Are they then performing in terms of the revenue? What is their operational cost?
Okay.
Because then I would see what type of business and what are they using their money for.
All right.
So then within the operational cost. And then I would want to see whether they're making a profit. If they're not making a profit as well, it's fine, but I will be informed by their operational cost. How are they driving the operational cost? For example, a manufacturing company.
All right.
As a person who's viewing from outside, I would want to see a salaries transaction or salaries account to link up that indeed they're in manufacturing. You can't be a business in manufacturing but you're not employing people.
Okay.
So these numbers speak to each other. If you're a service business, I want to see that you have consultant fees that you are paying out. So then your financial statement is a tool to tell me what exactly are you doing, and is that generating income for you? Are you performing well or you're not performing well? And who is spending the money? And what is that money's value in terms of return? Let's say I'm the investor, I want to invest in you. I need to check whether I'm going to get my returns back if I invest with you. Do you have assets? A business that is a manufacturing company will have assets, but maybe a business that is a consulting firm, because they services, they don't need to buy equipment a lot, then there will be difference in the asset base. Who are you owing your liabilities, which I'll see in your financial statement of financial position. So it's actually a matter of understanding what the financial statement as a tool for decision making helps you as a user. So as a business owner, you also need this understanding because it then reflects your business. We all know the accounting equation: assets is equals to is equals to liability and owner's equity. If you're really into accounting, you should know that. So then in the nutshell of things, it just reflects your business. What assets do you have? What liabilities you do have, and what does your owners have as their worth? And if I'm an investor, I would be interested in that worth. And if I'm a banker, I would be interested in the liabilities you have. Who else do you owe? Are you paying those people? So do you see? It depends on the user. Yeah.
So is this something that I can do myself as a business owner, or do I really need to consult?
I love that question because business owners, they feel like accountants are the ones that you push the numbers to. I always say every business owner have to have a understanding of their business transaction in numbers. So then at any given point, at least understand what is my revenue. What is my operational cost? Is it driving this operational cost from? What are my assets and what are the assets that are generating my income? So those things, as much as you can't really know how to prepare the financial statement, but you should be able to say, this year we have generated a revenue of about $1 million because you have the numbers. Then the accountant's job is to take it and put it into a financial statement using the International Financial Reporting Framework. Obviously that's technical, but the numbers should not really be technical. So people, as a business owner, you should be able to know. And again, remember I said there's management accounting. Management accounting is a tool of a business owner. So every business owner must be conversant to know that my sales are informed by this price, are informed by these quantities. For me to break even, at least to not make a loss, I at least need to sell how many units. And those things are just a basic information that should be in your business. As a business owner, you should be able to have a conversation about your business in numbers. Basically. Yeah.
Thank you so much, Millycent Mashele. there you have it, ladies and gentlemen. If you need any services that's with regards to accounting, you know where to get her. Thank you.